You don't think about trying to outtrade crypto, it will crush your skull. The risk, I think, for you not owning any is get ready for decades of underperformance in the face of stronger and stronger debasement of your buying power. It is going up and to the right, and it is going to be a part of your life until you die. And you want to get up to speed sooner than later.
So far in this series, we've been mainly focused on gold, a little bit of silver, and obviously some of the junior miners. But one of Eric's great passions is also the crypto space. So I wanted to have a chat with him about how he looks at this space, because in the world out there, particularly on social media, it's very tribal. It's kind of crypto and the rest of the world. And even within crypto, it's Bitcoin versus Ethereum and some of the smaller tokens versus everything else. And it seems that everyone is at loggerheads. But for Eric, these are very much complementary to a portfolio, a traditional portfolio, and also complementary to his views in the mining space and gold and silver. So I wanted to understand how he approaches this space, how he picks the particular coins and tokens that he likes, and also how he runs them, something we talked about before, but how he then runs these positions, how he builds these positions, and how he looks at these over the medium to longer term. So hopefully this will be a fascinating conversation about a broad-based look at the crypto world. Welcome everyone to another episode of How to Invest, and this time it's how to invest in the crypto space, because it's a subject that I know Eric has wanted to tackle for a long time in depth. We've avoided it so far, but now at the beginning of 2024, we thought this was a really good time to have a look at the broad spectrum of the crypto world. So Eric, good to see you, and I'm looking forward to this one.
Happy New Year, Roger. Good to see you as well.
Before we go on, as always, we have to say none of this is investment advice. It's all for engagement and entertainment purposes, and everyone should do their own research and have their own reasons for investing and their own horizons for doing that. But crypto is an exciting one because there's a whole range of questions I have here about how people should think about crypto in their portfolios and in their investment landscape. But first, before we do that, I just want to start breaking down the actual space, because this one is not really going to be about what people should invest in, but why you do it and how you look at it and how it fits in. But first, before we do that, could you just explain, when you talk about crypto, what are you talking about? Are you talking about Bitcoin, crypto coins, NFTs, digital finance, equities as well? What is the universe that you call, let's say, generically as crypto, but might be slightly bigger than just simply that?
I would consider crypto everything, the guts of it. I play all different types of tokens. I own NFTs. I invest in everything from the infrastructure, companies like Chainlink, which I think are going to have a massive long-term impact with their oracles and the bridging technology. They're a top 15 token, to just making sure that somebody who's coming in, just get your Bitcoin and your Ethereum. Don't do it when there's so much hype on the news and the price is up tremendously. Do it when things are cooling off. Have the discipline to put those positions on. And you don't really need to worry about execution risk as much with those two. That should be at least half of your portfolio. When you use the word in the disclaimer, entertainment purposes, that's what I'm going to try to do in this interview, because this is an area where the largest opportunities in any capital markets, any asset class exist today going forward, in my opinion. Crypto is the majority of my investable assets, my net worth. It's over 50% of my investable assets are in crypto. A good portion of that, a lot of that, is because of the profits, not necessarily because I continue to deploy capital, new capital in that area. But when I talk about crypto, what am I saying? My journey started back in 2016 when I bought my first Bitcoin. Well, it started before that, because being the gold investment letter writer, I had subscribers and friends coming up to me as early as, I think it probably was 2012, 11, where I started hearing about Bitcoin. And I looked at it after, it was around 2013. I remember looking closer at it and saying, I'm not going to dismiss this so fast, but I don't know how to buy it. So I went and I bought a bunch of GoDaddy domains like bitcoinbrokers.net and all this stuff, thinking if it hits, I'll make money that way. But the first official purchase I had was around $450 per Bitcoin. Bitcoin seems to be the gateway drug, right, Roger? I mean, that's the one we look at first. We hear about crypto, and then you open up to this entire world that is very vast. and degen, as they call it and us. I am a closet or not so closet degen. But I recommended Bitcoin at under 500 in May of 2016 in the Gold Investment Letter's free newsletter. But that was play money. I only had, a few grand in it. I ended up flipping it early around 2,500 in 2017. I got very lucky that I didn't get run over by a semi-truck because I had shorted it through GBTC at 2,500 because I thought it was getting crazy at that point. I covered it just in time when it dipped under 2,000, and then we saw that roar to 20. And I was trading it a little bit, but what happened was it got my attention, similar to when I first got into the business, and I was a broker at the age of 20 in the U.S. and Chicago. And I started to see these stocks in the market where we were not participating. It was like I worked for some older school guys. I would ask them about Yahoo, AOL, Netscape. What are these things? Why are they going up, 40% a day? And the response was, it's a scam, And so I got that reading all the way into the first money that I really made as a person was probably going into that 2000 bubble. And that's where I had my first 10 baggers, by the way, in the internet. But then I blew up. Everything blew up after that because I didn't understand cycles. I was 24, 25 years old. Okay. And I gave it all back. And then watching from there, how this all developed, the reason I'm bringing this up is because the 2017 top, when it started to come back down, I had done enough work on blockchain and crypto at that point where I said, I'm actually going to take a serious position in this stuff for the next run. So once Bitcoin breaks 8,000 on the downside, I'm starting an auto accumulate long-term portfolio positioning. And I did that in part because of my experience going into the 2001 recession that blew up a lot of these stocks where you saw Amazon and things like that it had massive drawdowns of 80%, 70%. But if you actually, the one lesson I learned back then was I regretted that I didn't learn more about what the hype was all about. I believe the bubble was so big in 2000 in internet stocks because the market looked forward and saw how massively this was going to change our life for communications and information, that age. What we have in our hands right now is even bigger. It is the financial, the economic supercomputer information age. It is not just information that we're building upon that. Now it goes into the money. And the money is even bigger than the data, right? So I got whiffs of that experience. And I said to myself in 2018 and 19 during the bear market in crypto, I started to do my research. I started to pick away at altcoins, and that started with Ethereum. And then it started to go down the trough into the lower market cap companies. And I still suggest this to this day to anybody who's new. Make sure if you're going to get into crypto, don't just start looking for all these miracle coins that can go up 1,000x and you can retire or whatever. Those are tough to do.
Do you have kind of characterizations? Do you have effectively different sectors within the crypto space? Or do you just lump it all together and you find something you like and you go for it?
A bit of both, but more lumping it together, I think, certainly in the beginning. I own over 150 tokens, maybe 200. I mean, it's a lot. And it's like, some of these, I don't even know where they are. It's like I'm not the best example of stewardship on some of this. But what I can do is I do have a lot of tokens. What we've had here is a pretty consistent 4-year cycle in Bitcoin that draws the rest of the performance in these other layers. And right now we are in like spring, early summer in crypto. You get Bitcoin to outperform in the beginning of a bull cycle. Bitcoin starts to take that percentage of, domination of the market cap in crypto. It becomes its highest before you start to see Ethereum outperform. And then a lot of what they call alt season, a lot of the smaller ones start to kick into gear. I think we're going to see that really soon here. It's kind of like this rotation, people come in through the front door with the big one and then get comfortable because the gains are piling up on paper and start to look for, if they're going to do the Bitcoin spot ETF, what's next? Oh, it's Ethereum. Well, let's get ahead of that curve. Then what is next after that? And then you start to go down this rabbit hole in crypto that can never stop. My favorite themes for this year, I think in terms of potential performance, are going to be AI. I really like DeSci, decentralized science. Maybe not for this cycle, but the next cycle could be one of the hottest ones. But there are very interesting plays on longevity. So I go across those verticals and look for themes within the token arena that instead of buying equity as an angel investor in a private company looking for an exit, I buy the utility of the token and use it as a pseudo investment vehicle. But I still look at a lot of the traditional metrics that I would use even as a venture investor, where I'd love to see venture backing, several rounds of financing, cash in the bank, years of development of a technology, and real growth. And so when I apply those things to the tokens, I think it de-risks those investments. So then you have the alt season, you have the DeFi season, you have these individual ecosystems, Solana, Cosmos, instead of just Ethereum. They start to get hot. Who's been building on Cosmos? So the market starts to shift in those narratives, and then it seems to end up in NFTs. NFTs are one of the later reactors in a bull cycle to, a big move. So I want to get ahead of those themes, and that's what I try to do. But do I end up saying I want exactly X amount in NFTs, exactly this amount in Solana's ecosystem, and this here and this there? I don't. I'm not quite that organized, but I've got exposure all over the place.
Well, I love the fact that you said you don't have any clue where some of these things are. So this definitely isn't investment advice. But in terms of advice, and this is something that we covered before, and I think this is really important because obviously you said you got 50% of your portfolio there. You love your volatility, you love your risk, etc. But let's say you're an investor, a normal investor, and like myself, and I'll have index stuff, I'll have a couple of bonds. What part, what position should these things play in someone's portfolio? For the normal investor, this is a small percentage, but with a very, very, very high opportunity on the upside. Clearly, they could go to zero, but hopefully not. How do you see these things kind of benefiting, complementing a general traditional portfolio?
Well, let's get into it, Roger. Do you own Bitcoin personally?
Nope.
Why not?
Two things. Technology. I don't understand half the technologies behind these things, and most of the time I've rarely found somebody who explains it in a simple way. And what I hear all the time is tribal arguments between those who like Bitcoin, those who don't, those who like Bitcoin versus Ethereum. And I don't understand the technology behind it. So I'm always a bit nervous about something which I don't understand. I understand some of the principles, and I have had a few people explain a good example of why blockchain is relevant, for instance, in terms of, let's say, overall pensions and being able to fractionalize investments so I can own something that might be beyond me normally. So I kind of understand it from that perspective, but I've always been a little bit nervous about stuff where not only that, but when I look at price action, I've always found people who are explaining price action retrospectively when the price action doesn't conform to the future forward thinking that people had. So people say, this is going to happen, it never happens, and then they go back and go, well, it was actually this. So I look at it and go, God, I don't understand the technology. I have no idea on the price action. It seems to be backfilling price action. So I've always kept a little bit of a distance. That volatility is high, and every experience that I've had, and I've had two experiences with tokens, they've had massive bid offer spreads. I don't know where they are. I'd have to go through so many emails. So it's just one of those things where it's not easy.
You're seemingly quite conservative. You're not in the space. I'm a lunatic. I'm very, very involved in the space. And let's see if there's any level of possible conversion based on what got me sucked in. First of all, one of the things you said that's very important is it's not easy. So that is why there, in my view, is one big piece of why there's still alpha ahead. When this shit is a click of a button and everybody owns it, and it's never a thought, you don't have to go and get off of your couch and just buy an ETF, but you actually have to have a wallet. And you have to either hold it on an exchange or a decentralized wallet or in cold storage. Here's one thing I guarantee. I'm going to give one guarantee to you and to everybody listening, and this is the only guarantee I've ever given in my financial career. Certainly isn't on the investment. It's on the fact that any time you spend, Roger Earth, educating yourself on these matters right now, you will not regret that you did so, because this stuff is going nowhere. It is going up and to the right, and it is going to be a part of your life until you die. And you want to get up to speed sooner than later, especially as an investment opportunity. Okay. But certainly even as we deal with money and value, that's what the bigger story here is. That's why Bitcoin is so vital right now as a theorem, as a solution in the monetary system that cannot be manipulated and inflated away. This is why gold's so important as well to me. These are vital. And
I mean, that's kind of a key element, because as well as this is that I'd like to understand why you've come at this from a world where your metals and mining and gold and your crypto, because most people out there, is the tribal is like, oh, gold, oh, it's Bitcoin, and it's, one or the other. But you actually see these as complementary, and these are things that you kind of believe should be in a blended portfolio. So maybe as you're answering this, you can explain how you came to this from that. You talked about the fiat currency, so I get that bit of it. But then when I look at how many coins there already are, it just seems like it's a crapshoot. It's like, oh my God, which one am I going to pick? So that's the thing where I've got enough stocks to have to look at. I've got enough global indices.
Listen, man, you don't even own Bitcoin yet. It's like saying, okay, I'm 40 pounds overweight, and if I don't do X, Y, and Z over the next year, and there's a tornado that hits London, why would I even bother? Instead of just taking one foot and putting it in front of the other and going to get some exercise, right? Like, all you got to do is make one decision. Are you going to enter the area with Bitcoin, or the rest is noise for you? Like, either you're going to get some Bitcoin and maybe some ETH. My suggestion to people is at least half of what you're going to own in crypto should be split up. Maybe right now, even 50-50, Bitcoin, ETH. You want a compelling reason for owning Bitcoin? How about this? Bitcoin, look at the ETFs that are coming. Let's just say it's dozens of billions of dollars that are going to inflow into the largest asset managers in the world. This is a pseudo low float global penny stock with appropriation and relevancy to everybody on planet Earth and no float. That's what Bitcoin is. There's none out there. So every millionaire in America, we want one Bitcoin. There aren't going to be enough. The last cycle, I was still thinking, hey, this could just turn around, blow up, and go to zero. It still could. And I've said this all along, which is that Bitcoin is either going into the millions or it's going to zero. Yes, it's very volatile, but it's had higher highs, higher lows every 4 years. Like clockwork. Why is that? Because there is a very limited amount of supply that even gets taken out of the equation. So the risk for you, Roger, and the people that are out there watching and kicking the tires on this, the risk, I think, for you not owning any is get ready for decades of underperformance in the face of stronger and stronger debasement of your buying power. How are you going to do for your family in that scenario if that is reality these days and going forward? How do we defend it? We defend it by keeping what we have with gold and that buying power. And Bitcoin allows us to not only keep up, but to get ahead during these cycles. Put a percent to work now, and then say it goes up 4x in this cycle, sell a third, get your principal out for a while, but otherwise don't even touch it and beg and pray for that next crypto winter where you could actually get up to 2 to 4% of your investable assets in there. I actually believe that one of the risks of not being involved right now too is that this could be the last 10x cycle. Because it's, we have all this big money, all the players are coming. It's like almost it's going to become institutionalized right in front of us. It is. It is happening. So when that occurred,
it's sort of happened already, because you can see that the chart of Bitcoin and the NASDAQ have been pretty much the same now for 2 years, with a little bit of NASDAQ outperformance and Bitcoin playing a bit of catch up. But, unless someone's going to tell me that the halving model is what's driving the NASDAQ, actually the same thing's driving NASDAQ as Bitcoin by the looks of it at the moment. So as you say, institutionalized.
The Bitcoin will freaking destroy the NASDAQ.
Oh, but some people would say, I'll have 50% of everything in the NASDAQ. But realistically, and they're talking about, this is not investment advice and all that and being sensible. What we're talking about here is maybe 5% of your portfolio in Bitcoin. And I'm guessing the way you're thinking is 5% in Bitcoin. That gets your foot in the door. For some people, it might be less, but what we're talking about here is
1%, Roger. Just get
1%.
started, baby.
And then it can go up 10x. But then what you're doing is that as it moves, you either take just the cycle in Bitcoin, or you take the cycle with Bitcoin and start to reduce your weight into Bitcoin into those higher beta, high octane types of coins that then can have the 100x. And as you've experienced some ridiculous multiple 100x returns, for a lot of people, it's just overwhelming. In that, I've grown up in financial markets where I've built my knowledge over time. At the moment, I'm inundated with hundreds of coins. How do you go about picking them? You mentioned some of the sectors, and how you look at it that way, because to me, it's just loads and loads of coins. And even when you do choose, it seems that there's more of a battle between the Solanos versus the Ethereums versus the Bitcoiners that are always on Twitter having a go biff boff. How do you get through that? Because there is so much for someone who is completely uninitiated like myself, but also, I've got 20 other things I've got to look at as well. How do you choose?
Well, that's in my DNA. But first, let me just say, it sounds like somebody's been sending Roger a lot of false flags, distracting you over here with all these tokens and like, my God, what all you really need to do is one thing. Either you're going to have some Bitcoin exposure or you're not. So, this is it. Just for God's sake, man, just buy some freaking Bitcoin. You buy 0.2, buy 20 bips of your portfolio. Do something. Listen, I'm saying this with love, but honestly, get your head out of your ass, man. This shit is going so much higher. Okay. And you're going to sit there and you're going to be the guy that capitulates at $300,000 Bitcoin. Okay. And I don't want you to be that person. It's hard to outtrade, any volatile asset class. I tell people that it's impossible to outtrade crypto. So while you're educating yourself and with things that are going to help you really internalize it, just take it that little bit of time. Because I get it. I mean, I don't want to buy stuff I don't understand. I certainly am not going to hold anything with conviction that I just am getting on a tip. When it comes to the other tokens and coins, here is my suggestion. I'm going to plug Phenom, Phenom, crypto.com. We have a free e-letter. I talk about some of the core top 50 and 100 tokens that I like after you end up buying into Bitcoin. So just like we did with the miners, it's kind of a process of don't worry about some of these. There are lots of scams in here. There's no doubt. And you could just get the big thing you don't want is to get too distracted with all this noise and all the crazy shit where you're just not participating at all in the stuff that you don't have to worry about. You can buy them, you know what they are, and you can have some exposure to the space. The other thing I would say, you never want to buy like a Bitcoin miner. You're paying interest on notes. You're paying for a C-suite. You're paying for listing fees, legal. You're paying for all that just to get access to Bitcoin. Get used to owning crypto. Have a crypto wallet. Learn how to use it. Learn how to send crypto. Keep it on a trusted exchange. And as you learn more, you can take greater security measures. I also like to suggest that under a certain price, put the auto accumulate on. You do a Cash App, PayPal, Coinbase, any of these things where you're buying like a little bit a week, $100 a week or something like that. And then when it goes above that price, you stop, just shut it off. But then if you get a bad winter in a bear market, that's where I've done, I think, my best. It's the actions I've taken during the winter, not to worry about if I'm down or up or whatever, but just to sock things away in a slow, prudent manner. Because I've never seen anything like crypto before, and I don't think I ever will again. If you want to try to play and make a lot of money in this world at this time, you've got to be in crypto, and it is phenomenal, and it is scary, and it is a little bit wild, but that is why the alpha is still here.
One of the important things that you talked about there, and actually we talked about before in this whole concept of volatility, is that we've all seen time and time again over the last few years that there is idiosyncratic risk if somebody wants to go all in on a single coin or company that's related to this space. But this is why you do your scattergun approach. I hate to say that, but let's call it that, because what you're not doing here is going all my eggs in one basket. What you're saying here is venture capital mentality, take a few, because yes, some of those will be absolute bog holes, as it were, but some of them won't. So could you just recap on that methodology that you have?
Having an allocation in crypto is It's imperative. Okay. That's my belief. And if you don't, you are missing out. You're going to lose out. What you're talking about is analogous to like when we got into the junior mining portfolio or the venture portfolio, where I had said if you had 10 grand in 10 stocks or 100 grand in 10 stocks, I expect that, and I do this as an exercise where 5 of those could go to 0, and then one of them is down 50%. One of them is up 50%. One of them triples. One goes up 5x. One goes up 14x. And what do you have there? You have 5 or 6 duds sitting there that you could focus on. But because you have the winners and their binary, the outcomes on some of these bets, what you have is world-class returns, believe it or not. So on the smaller, what they call the shit coins, the altcoins, right? If you're going to start getting into that, yes, you need a bit of a portfolio effect. Some of them are going to be scammed. Some of them are going to go to 0 because they're high risk. They're in very early development phases. We don't know if the management team can execute. It's the same things you have in any sort of venture in tech or any other industry, really, if they're at that stage, because a lot of these are newer technologies, but some of them are absolutely mind-blowing. So if you get 1 or 2 of those right out of 10, guess what? World-class returns. Get in the game. And you can do it just with Bitcoin or just with Bitcoin and ETH and never worry about another thing. Just learn about those 2 ecosystems and what they are, and you're going to be fascinated and you're going to be busy for a few months.
Let's say we're in this world now where I have now put 5% of my portfolio into Bitcoin and Ethereum, ETH. Now, you just talked about 500. What are you actually looking at? What are you thinking of the sector? You mentioned the sectors. Where do I start? What should I be looking for? Because in equities, I go, I think miners are going to go up because we're going to have a rebound because they're cyclical. What do you do in this space?
Well, I just bought a chunky position, half of it, most of it, for a tax loss swing sale on the quantum computing, 2 quantum computing stocks that are on NASDAQ. I don't own any tokens, but these are publicly traded companies. So what did I do? I started to dive via their website and learn about quantum computing to a certain degree. There's a certain level of traditional research and due diligence that I do and I apply to when I'm looking at tokens. Way that I look at some of the other tokens, a lot of times when you get into the top 50, I look at those and I try to put best practices of traditional VCs that are going to look at investing in a startup, where you're going to look at the market size. You're going to look at the tech. Do you have 10 times the efficiency, 10 times the speed, or 10 times the cost reduction? Something that could be disruptive. Do you have a team that's talented? And also one big deal is tokenomics, which is like market structure, capital structure.
And then just as we were getting into the technology and how you pick your technologies, our technology failed on us and we had to stop the interview and then completed the following day. So if there's a slight change in sound or look, it's because we recorded the last few minutes of this interview 24 hours later. What I really wanted to get into, what I really wanted to understand is that in this absolute jungle of crypto where there's hundreds and hundreds of these things, what are the criteria that you're looking at? How is it that you compartmentalize these things? And how do you think about these almost like sectors within this space and how you choose which ones you're going to pick?
Tokenomics are a huge deal for me. If the tokenomics are not good, meaning just like a market cap on a stock, if they have way too many shares out and have over diluted the corporation, your returns are diluted as well because, a dollar stock with 10 million shares out is a lot different than a billion shares out, and where that can go from there. You have the circulating supply currently, which I check, and then you have the max supply, which means that a lot of these are programmed to leak new tokens to raise capital for, whether it's an open source or foundation, or there is a corporate structure there to grow the business. And it's very interesting watching those things first as a screen to even take anything seriously in terms of their tech or their network effects or their growth or their hype ability, if you will. But what I do is I go back to some of the basics from my days and even today as an angel and a venture investor. So whether it's public or private markets, but I tend to look at these as a lot of these are startups, right? So I literally will look on Crunchbase and find out, does this entity, the parent company of this token, have they raised money? And have they done so via, coin offerings, traditional equity financings, or both? and find out, how sophisticated. I think there's a level of sophistication that comes and a little bit of comfort that comes if I see that these groups, these entities have actually raised traditional venture capital, and I can see the names on the door of who wrote checks already and how much cushion, if you will, they may very well have for their operating runway. Blue sky in terms of the market that they're in. Well, how big is that? How big is that going to become? Where is the growth? What are those numbers? The disruptability of the technology, perhaps, is it 10 times faster, 10 times cheaper, 10 times better, where it could actually have a disruption of the status quo, whatever that is today. Those are very good metrics still in the traditional education of being a venture investor and moving it over into the token world. It's getting your head wrapped around the utility of the value of a token versus being a shareholder. Last but not least is the team. Who is behind the situation? What is their track record? Have they had big successes before? Are they legitimate? Then last but not least, after the team, is the technical picture. Where am I buying? So there's what do you buy, and then there's when do you buy it?
It sounds like when you actually look at these things, almost like your first base is a bit like you do in the mining world, which is you like to know about the mining management. So is it kind of a case of familiarity is one of your major drivers as a first base for picking the types of coins and offerings that you want?
If I have modest confidence that, or at least confidence that these guys are not scammers, number one, they're actually legitimately trying to build something and swing the bat as entrepreneurs, then sometimes I'll give them the benefit of the doubt. If they have something that is compelling in terms of their story, in terms of the sector within crypto. So for example, I like to have and have been building exposure in AI in the crypto token world. I think that will be one of the top themes in this next crypto bull run. The reason I mention that is because there's one of my big AI bets that's a really tiny token. And I actually have I've not had no communication with the team. I have no identifiable value proposition with core technology, but they're very active in terms of their messaging and what they're doing in AI. And they were early in their tokenomics. And then that also comes into the position sizing.
And you're saying that, you talked about you've got, I think, hundreds of these things, and I wouldn't have the bandwidth to be able to do that sort of research. Or is it, as you're saying there's a couple of things that you're doing, which is you have your sector bias, so you might scoop up more within a sector that you think is going to do well, more within a theme, let's call it, rather than a sector that you think is going to do well. And then secondly, you're getting that diversification because some are ultimately going to be duds, either just a bad business model, whether they're scams or not. Some of them might be just a bad business model. But if you have that diversification, as you've always said, by having a large number in there, actually you only need a few of these to do that 10, 20, 100x to offset a lot of the others, which might not really get motoring at all. So is that the sort of reason why you have so many on? Because I couldn't deal with more than a few positions in any assets, never mind, looking at this space where I have no knowledge at all.
From a realistic standpoint and from an importance litmus test standpoint, for you and for others, you just need to first not get distracted by all that and decide if you're going to be A, involved via Bitcoin and or Ethereum, and B, to what degree. Then from there, it's a process anyway of what you want to get into. I have probably in excess of 15,000 hours of study in this area. So, I've immersed myself in this space for the last 6-7 years. And so that gives me the comfort level to do some of this. But even one of my downsides, I would say, is I've got too many positions on because, the diversification key, although, the flip side is some of these small bets that I have, and a lot of them are more concentrated in the themes within the space that I really like, that I'll take some flyers on, take smaller positions on. And I've seen and had and experienced tokens in a bull cycle in a summer that have gone up for me 100, 200, 300, 400, 500, 600 times. So that is the reason for some of the diversification. And a lot of those I don't pay too much attention to. I'm not trading them or whatever. I'll actually literally use some of the speculative accounts that I use, that I have on the exchange side. And only when one starts to drift upward in terms of the value of my portfolio, do I go, I better go look at what they're doing and see what's going on here because this one's been working out. I took my initial position. I bought a little more over time. It's fairly illiquid, but now all of a sudden it's a top 10 position and it was, way down there. And then I'll pay attention to it. And that's how I'm able to manage some of that stuff. It's sort of hands off with a lot of those smaller ones because I'm not in them for 30%. I'm not even in them for a triple. I'm in them for, massive bangs, or I expect to lose all of my money, and that's okay too. As long as I have some of those winners that I identify in there, it tends to work out in a very good way as an investor and as a speculator. You can go the fund route, and I'm not talking about a publicly traded fund. I'm talking about, find a fund manager that is credible. Give them some money if you're a accredited investor or qualified purchaser. But I think we stay at square one for people and just say, look, make sure you have some crypto, and you can focus in on the top two. Just that's it to get started, and then worry about the rest later as you learn.
To finish off, to wrap it up, could you just very quickly recap just how you think about getting into these, but more importantly, taking profits on these?
When and how to sell is the toughest part of this game. It just is tough, So I like to start with, okay, my goal is I'm somewhat sold on this crypto thing. I want to allocate 2% of my funds in the next 6 months, or 50-50 Bitcoin ETH for half of the portfolio at least, or 2/3 of it, and just get started that way. And then, so what is that number at 2%? Cut that number in half. And that's the money that you're going to deploy now, right? So that is the money you just go buy the market. Don't worry about saving, 10 bips or something out of it. Just go buy it, get it on the books, and then keep some dry powder in there, especially mentally and physically. Hopefully it's in the account. This is a very volatile space. Sure. So if you have the discipline and the self-awareness that you can end up understanding all of these risky components of it, when you get a big wash down, and I'm talking about 20, 30% in the prices of even the big ones that are going to happen several times at minimum during the bull cycle, so if you put, half of the money to work, put another quarter to work, like an auto accumulate, sort of a small number that, if we run into a 6-month correction, you're going to be socking away a little bit every week and building your position, but you only do that up to a certain price. So I would buy it in pieces, at least in 2 pieces, meaning, put half on the books of what you want immediately, and then sit back and deploy as you get more comfortable, or as you get really uncomfortable, ideally. That's your real opportunity to start going in heavier and start to buy more, because you're talking about 2% of your entire investable assets. You can afford to lose it all. Guess what? The world will still turn. You will still eat, and you will have a roof over your head if you lose the 2%. I mean, we're not talking about some massive amount of risk. That's also how I approach some of the riskier tokens, some of the other top 50 even. I tend to take like a half a position of what I want immediately under a certain general level while I feel like things are attractive. And then I have some dry powder for pullbacks, so that my mindset is not in one where I'm like, oh, I've got to time this perfectly. And then, I get really pulled back on hard because this is a crazy market. On the sell side, particularly, listen, with Bitcoin and Ethereum, quit thinking about the short term. Quit thinking about it. These are must-own assets that you need to just sock away, Roger. I am telling you, you personally, man, you of all the conservative people out here, put 1% in Bit, 1% in ETH, have another 1% that you could buy on a big severe pullback going into the ETF, sell on the news or whatever, just in those two. Or maybe it's a total of a third of 1%. But do something. You are going to regret not having any assets in this space.
It depends on time horizon, obviously.
Yes, time horizon, but we all tend to think too short term, especially with stuff like this where it's tough to grasp what the hell it is and what's going on. If you're thinking on that horizon, so say it's a 4, 5, 6 year time horizon, and you can make 10x, would you do it? So how do you do that? You put some money to work, you get in. You don't think about trying to out-trade crypto. It will crush your skull. Trust me. I'm not in this for a store of value in Bitcoin yet. Maybe later. I'm in gold for a store of value. I'm in Bitcoin as a venture risk categorization that I'm looking still to make 10x my investment on, right? So knowing that, typically if you invest in a venture fund and it's anywhere near early to, seed stage or whatever, which is where we pretty much are, I still think, in this whole ecosystem, those are 7 to 10 year liquidity events. So cut that in half, give it half that amount of time softly in your brain. And then if you get a 10x move or 5x move abruptly, meaning like in the next 12 months, get your principal risk out. Sell it off if it's gotten wild and it's just getting crazy.
This is your third principle, isn't it?
Well, that's where it can come into play. But the one thing I'm reluctant to say about a third, which is, typically if I have a high risk asset, whether it's a junior mining stock or a crypto token, I'll sell a third at a triple and get my principal out. I no longer have any sort of real financial attachment or risk. And so then the second third, I tend to sell. That's a little more discretionary, obviously, hopefully at a higher return than the triple. It could be between 3 and 10x. And then that last third is there for when I just am thinking that the entire theme of the space, the blow-off frenzied top once and for all in crypto comes. That's when that third comes into play to be sold off, or, a portion of that even, because at that point, if things are up so much, you could even just keep a little bit on the books just in case, if you will, and you'd have made an absolute fortune. But that is really, at that point, it has nothing to do with the particular crypto project. It's just that we're in a third phase bubble frenzy secular bull market that I'm saying this has gotten out of control. I remember back in 2020 when I was still building my positions up and still being a buyer before we really had that rip. I remember Bakery Token, bought it at 0.012 cents. I bought 550,000. So it was like $6,500. Okay. And it went up, and the last sales I had were at $7.77 5 months later. That was insane, but it started to get, crazy. But the thing is on that, if I would have sold a third at a triple at 4 cents or whatever, I would not have made the money that I made. People don't think this stuff. They think it's all hype because it never happened to you. Guess what? It happened. It happened to me. It happens to me. It's going to happen to other people that do this stuff and navigate it wisely, are willing to take some appropriate risk and have some balls and, are able to weather some of this volatility. And some of that, to be able to get even a part of the position off at those and hold things for those massive returns, it takes some detachment, right? It's not checking the news every day. The flows are what makes a difference, and that is coming, and that takes a little time and a little detachment. The reason I made out so well is because I checked my accounts less often and I traded less often. I actually kept a healthy amount of patience to let this stuff play out. Buy, accumulate, sock away, hold, chill out, let this stuff play out. It's either going to be a big winner or you're going to lose all your money. Look at it that way. There are things that I have seen in this space that will blow your mind that are coming and are going to be a part of our lives. And you just don't want to not have exposure to that, at least with the basics. Bitcoin ETH. That's my message.
So to summarize there, I think obviously you're heavily invested in nitroglycerine, but for someone like me, for general investors out there, this crypto has a place in a portfolio, albeit maybe a small percentage, because the risk rewards are very high in both directions, but the rewards are asymmetric. So that's kind of your hedge against fiat currencies, the dilution of currencies. They are complementary to your mining space, and particularly gold, because that's a lower volatility asset, which is also a hedge, but is much more of a defensive play against that fiat currency, whereas these are much more of an offensive play, as it were. And then within all of that, you're going for diversification because you appreciate that some of these things are going to probably fail, but some of them are going to do remarkably well, and they will offset each other. So if you have that diversified portfolio, 1 or 2 going to the moon are going to offset maybe 3 or 4 going to zero or failing as models. But making sure that you haven't got all your eggs in one basket, and then when you're actually picking these things, you're looking at things like a sector bias. So you're picking effectively a thematic view and scooping up maybe a few more relative to other types of ideas within that thematic that you particularly like. We could have a portfolio which is relatively low risk because it's low positioning in here, but relatively high reward. And when you're actually thinking about this huge volume of opportunities, it is a bit of a jungle, but there are ways that you have already, as you expressed, ways of picking them, but maybe taking that sector bias is the way to play it.
If you don't buy into what I'm saying, whatever else, watch what is released via commercials, data, articles, and sales materials by BlackRock, ARK, Bitwise, Invesco, all these major players, Grayscale. What they're going to start to do is circulate data about how adding, 1% Bitcoin to your 60/40 portfolio since 2008 or 9, what did that do? How much did you outperform? There is no way that some of these people out here that manage big amounts of money, RIAs, large RIAs and different fund managers, pensions, insurance companies, certainly family offices, when they've got a crusty ass 60/40 portfolio and they can add 3% crypto and become the top 10 percentile performer over the next decade with their colleagues. Some of these men and women are going to take that risk, and that's big money coming into a very small space. It's very compelling to have some of your portfolio in high beta, stuff like crypto. I've never seen anything like it, and we are not too late. You are not too late, but you need to get off your butt and get some action in there and just do something. Trust me, you will enjoy the ride, I hope, even if it doesn't work out particularly great because you're trying to time things and you're your own worst enemy, which I've been at times myself. But if you sock a little bit away and you don't worry about it and you just do even the top stuff, I'm very confident, we will make very, very robust returns over time.
Once again, thank you very much. Hopefully, in coming weeks and months, we might have a bit of a deep dive as we did with the miners, and maybe you'll entertain us with a few of the ones that you've picked and the reasons why you've done that. So hopefully we'll update with some actual coins and tokens in future.
Sounds great to me. That would be fun. I appreciate it, Roger.
Thank you. So as we saw there, Eric feels that crypto should be a part of a traditional portfolio. Now, he himself is very, very heavily invested in this space, and he says not for everybody. Certainly is not something that everybody should be doing. But 1 to 3% of your portfolio in assets which could 10x, 20x, even 100x is a good way to have a hedge, in his view, against the risks of fiat debasement, of inflation that could reduce the returns on the rest of your portfolio. This is a high-octane hedge to that sort of outcome, plus also a play on a potentially new world, a world which is driven by new technologies in this space. Diversification is key. He believes that you've got to have enough of these things in there to make sure that you have some of those winners, but to also offset the risk that some of these could go to zero. He even says Bitcoin could be zero, or it could be going to 1 million. But remember, it's about how you look after these positions. You've got to really think about these for the medium to long term. It's going to take a few more crypto winters before we probably get the full summer that people are hoping for. And so his is not a day trading game, because he says you'll get brutalized if you're trading these things. It's more a case of pick some, put them in your portfolio, but have them as a small percentage of your portfolio, knowing that when they work, and they should work, they will work in such a way that it offsets those risks elsewhere. Hopefully we'll hear more from him on some of his actual individual assets within this space, and hopefully we'll join him on that journey over the next few weeks and months.